Hello, everyone. Welcome to the Prospero.Ai stock market live stream. It is Fed meeting day, the Super Bowl for the stock market this year, something that's been actually years in the making as we were in the rate hiking cycle and holding steady for so long. But today is officially the day the Fed is dropping rates by half a basis point. The market is up, but it is acting a little strange. It's a bit chopping up back and forth, but it seems like it likes what it's hearing. George will join us in a moment and we'll discuss everything that you need to know about what happened today, what Jerome Powell said, how it's going to affect the markets going forward, what stocks that you need to be positioned in because of this news. Welcome to the stream, everybody. I see people are rolling on in here. Feel free to like the stream. It's good for the YouTube algorithm, helps us grow the stream. Also on Twitter, if you're watching on there, feel free to like it and share with your friends. But let me take you through some of the stories we're going to be discussing after the big Fed topic that we will start off with. But we have a company that I bet you all know and have heard of and maybe probably use in your own home. Tupperware has filed for bankruptcy. It was a surprising one for me to see because they're just, one of those boring common companies that you'd think would just be able to keep trucking along. But something went wrong in their business, and we'll discuss maybe some other companies similar to Tupperware that could file bankruptcy in the far, far distant future. I think you're going to want to stick around for that. It's an interesting topic. Then we have Microsoft and BlackRock, two behemoths of industry and business, teaming up on an AI infrastructure fund. It is worth billions and billions and billions of dollars, and they're going to be building data centers across the country. So we'll discuss what it means for AI, Microsoft, BlackRock, all of the above going forward. Next, we have a smaller company, Intuitive Machines. A deal was announced between them and NASA for a moon satellite contract that's worth maybe not as many billions as the Microsoft and BlackRock one, but still a few billion, $4.82 billion, not bad. It set the stock much higher, as high as 60% throughout the day. I'm wondering now, after I haven't checked since the Fed announced, maybe it's going even crazier. Let's see. Its ticker is LUNR for people that aren't aware of it. Hello, George. Welcome to the stream on this Fed day. Okay, so Intuitive is still about the same thing. So it didn't get the Fed bump, but we'll dive into that a little bit later. And then this is a great topic for George because I want to hear some of his experience in the stock market Wall Street world, because there was a news article that came out that JP Morgan had to hire people to kind of enforce rules that wouldn't allow their junior bankers to work exorbitant amount of hours, because it's been reported that they work 100-hour work weeks. So I can't wait to hear the insights that George can give us on that, the inside scoop from coming with inside that world. Next, we have the SEC, who approved a new rule for exchanges where they're going to be able to price stocks in half penny increments versus single penny increments like they used to be able to do. And the story was released as being super beneficial for investors of all sizes, but I'm wondering if that's the case. So we'll dive into that and see what it actually means for them. And then lastly, before we turn it over to the model portfolio update at the end of the stream, we'll talk about Meta, which just changed their Instagram teen accounts. They put a lot of new restrictions and rules, and we'll discuss if it's going to be meaningful for their business going forward, since so many of the people that use Instagram are of that age. And with the new restrictions, how will that affect Meta stock? Now I'm looking live at the market, and it's seeming to drift back down to the basically even line for the day. So a pretty weird reaction after the FOMC cut rates by half a percentage point. I want to look at QQQ before we dive into this topic. Let's get the net option sentiment. Still reading 55, so where it was at, basically, bullish level. George, what do you think the people should know about what happened today? What's the most important things to think about going forward off of this news?
Yeah, I mean, other than when it's obvious, we don't really go out on a limb on Fed predictions. And we were feeling pretty strongly Monday, for those that watched, that we were going to get the 0.5, and that's where the momentum was pointing. So I think it's just a pretty simple, like, sell on the news here. Like, the market was increasingly betting that way. The market, and I think we said, like, a lot of the rally last week seemed to be pointing in the direction that this was the expectation. So I just think that's what we're looking at now. I think the more interesting question is this just a bit of a profit taking, and then tomorrow, when it sets in after this profit taking, people are gonna, load up again, or is this just like, did we just get a little run because this was coming, in expectation of it coming, but then kind of like the bear story is going to win out more tomorrow again? I think that that's probably the interesting question. And I think, what QQQ net option sentiment, as you alluded to, is pointing to is more of that. This should help the market, on an ongoing basis the next couple of weeks, pointing to that story. But, right now on our app, we have a screener, SPY, net option sentiment decline screener. We've actually been seeing SPY net option sentiment softening a little bit. So I think that's why we've been, we added Oracle, even though that doesn't look like the best thing for today in particular, as this news was breaking. But I think overall, we're looking at a better situation for tech right now than the market overall. But I think your instincts are right that this is also a surprisingly, soft reaction to, very positive news for the market. I would say that the Fed is very, like, obviously, like, highly serious about cutting rates. To go from not cutting rates at all to kind of holding steady to go to kind of like a double cut is a huge sign. And then we kind of have we kind of had the added benefit of kind of what we've seen even leading up to it, and the tech market doing a lot better, the market feeling better. But those two things could be very linked. But yeah, I definitely think that on the other side, we've seen a very volatile market, and maybe we're just seeing, like, even good news not ringing all the way for people, just because there's still kind of this, like, at the very least, volatility hangover, or just what will be, as we keep kind of saying, a volatile market going into the election, maybe through a little bit. That's what we've been gearing up for. So on that front, it isn't necessarily surprising that we're not just getting a bull run out of this, for example.
And you have highlighted the volatility that you expect, up and through the elections, often on the stream. And something I didn't realize before I was watching the coverage of today is that next month is one of those gap months to the Fed. So they're not going to have another meeting till November 7th, which is basically almost on the eve of the election. That makes me a little concerned for the volatility specifically in early November that we could see. Do you think that could be the case where we've been highlighting it, but maybe there'll be like a period over the next several weeks where maybe it could calm down and then ramp up again right as November begins?
Well, I mean, I'm kind of expecting persistent volatility, but I do, and persistent. And the thing about a volatile market, right, is everybody's kind of telling the people around them, the institutions around them, that they're unsure, right? And when people are saying that they're unsure, that's going to make, like, the doubt kind of pervasive throughout the market, right? And I think that's what we're dealing with. It's going to be highly sensitive. So, does that necessarily mean we'll experience volatility every day? No. But what it does mean is, I think, events that would cause certain moves get exaggerated or get turned, right? I think in this case, what we're seeing in a volatile market is bulls being a little hesitant to go all the way bullish out of concerns for how volatile this market's been.
Now, I think some retail investors and maybe less astute investors They see the market environment changing from a rate hiking cycle to a rate cutting cycle, and they want to pivot their portfolios and completely change things up. Um, do you think that is a necessity? Do people should people be looking at this as an opportunity to change their portfolio? Is that the way you act? I feel like you kind of just follow the signals of Prospero, and I think that's kind of what the beauty of the signals. Like they kind of can guide you because that's the market direction that it goes. They will follow. But if you just want to share some insights on that.
Yeah, I think that's a great question. And I think for me, um, and macro in general, right? I think macro should guide your strategy at a high level and have you adjust your strategy to account for it. And news like this, you should definitely account for. But I think you're doing something wrong if a macro event is forcing you to change your portfolio around completely, right? I don't think that is the right approach. I mean, it is if you're a highly experienced macro event driven strategy fund, right? In that case, you're betting on events like this, right? But for most retail investors who don't spend every day in this stuff, you're not betting on events. You want your portfolio to be governed by other things like, the companies or products that you believe in and understand and that are in your comfort zone, right? And in those cases, macro should be something that you look at, ask yourself, how much does this change my view? How much does this change the assumptions around my portfolio? Do I want to be more defensive? Do I want to take on more risk as a result of this news? Those are the appropriate questions, I think, for the majority of retail investors around macro events.
And I'm about to change up and switch topics from the Fed, but I just want to tell our chat, because I see we have 500 people watching the stream, that if they have any questions surrounding this topic, just feel free to let us know in the comments. We'll be happy to answer. But I think we covered a lot around that topic. But so spinning to a company that filed bankruptcy, one that I wouldn't have expected to see is Tupperware, which, maybe they're a smaller company, boring company. Sure, they could file bankruptcy, but the one thing I think is interesting about the story is, people use Tupperware as like a noun or a verb. Those companies that become like so ingrained with society that they just become like a noun or verb. And I thought it would be so interesting, and it's not going to be intuitive because companies like Google and Uber that are kind of used that way today are so dominant. But maybe if we could try and predict like far out in the future, and it doesn't have to be the two I named, but a company that has that type of dominance that they become like a word in our vocabulary in the future that could also go bankrupt, like Tupperware.
I mean, I think it's funny to talk about Tupperware like this. But what we're basically talking about is uh technology, right? Technology that kind of changes the way people have experiences with things, right? And in the case of Tupperware, that's technology that changed the way people, you might say, cleaned up after meals. You might say, organized their, you could say it, but it changed the way, people approach that. And that's, when you say Google, when you say things like that, all you're doing is you're saying that, the technology kind of enforced a strategy around handling something that it didn't, that you just kind of have to say, that's it. I'm going to say something I'm going to take a really safe bet here, but it doesn't really matter. The thing that I see that as most likely is the Tesla bot, right? That little, and I talk about how cute that little robot is all the time. But whatever they end up calling it, I could see something like around your house being just we'll say Tesla, right? My laundry got Tesla and I think something like that. And I think it could be a lot of things, but we're basically talking about, I think, broadly a way, a solution or a technology that really changes a process so much that you use the name of it. And I think whether or not it's that Tesla bot, that's the easiest, that's the lowest hanging fruit, I'd bet it has something to do with robotics is the next thing, because that's the next thing that I see like broadly handed off by a lot of people to something else.
Yeah, that's super fascinating. The point you make, how like Tupperware is a technology, because so many people just think of tech as, electricity, computers. Like it's all digital today, but tech is actually anything that I guess enhances society that wasn't around before, right? And no matter what, if it's in the physical or digital world, doesn't matter.
Yeah, it's I mean, I kind of think of that as like there's a funny like old Mel Brooks comedy routine called The 2000-Year-Old Man, and he gets interviewed by Rob Reiner about this, and he's asked like uh what's the best, like, yeah, what's the biggest advance in your time? And he goes like, he doesn't edit it, he goes like saran wrap. And he's like you could wrap a sandwich in it, you could like, and he's like naming all these things that you do, and he's like, and it sticks to itself. And I think that's a good example of like, yeah, like nowadays technology tends to be in the cybersphere, right? But for much of our history, technology, or even you could say like devices or whatever, they were machines, or even things like, plastics. Um, so yeah, I think that's why that's going to be the next big shift, right? I think, and obviously this is related to AI. There's a shift from materials, life enhancements, to things that are just like in cyberspace. And I think the next realm is kind of automation.
Yes, super interesting to watch play out. And I do see a comment in our chat from Jonathan. He's asking about your thoughts on APP, net options, and upside breakout on the rise.
I mean, we've got a lot of positions in app, and I just wish it had a more serious name. I have a hard time taking myself seriously when I say app loving. Uh but we love app loving, right? And that's like, it first came up on our momentum screener last week. We had it in our trading letter last week, right? And then, hard to ignore, right? It got above Broadcom in our screener on Sunday, right? So hard not to love app loving. Uh, it's, yeah, I mean, when you dig into their business model, I mean, they've got a really good, stable B2B, segmentation in the app markets, right? And that's always like, when VC investors like look for early businesses, that's the kind of like safe floor that they look for, like stable B2B clients. And obviously they've really scaled that up. They have, like, I think at least four primary good, B2B like streaming service customers that are highly reliable. And yeah, other than that, the numbers are good. Institutions are betting on them. Profitability and growth both look good. Everything that we look for, this could be the new like SMCI for us.
Yeah.
Like, I think that's what it was last year. The stock that, like, yeah, we might add it, we might drop it, like, but I think it, like, based on like some of these waves and what we're seeing with net options or short pressure, dark pool. But yeah, I think we could definitely be sitting here in a year and be talking about like app loving in the same way that we talked about like SMCI at the beginning of the year, where we are just like, you know, 5 of our 10 biggest gains in the last year were SMCI or whatever. I could easily see, that being app loving.
Well, that's probably music to Jonathan's ears. So thank you for asking that question, Jonathan. Spinning to our next topic, Microsoft and BlackRock are teaming up for a $30 billion AI infrastructure fund. It reminds me of, the CHIPS Act, where the government had this big fund to develop chips. But Microsoft and BlackRock aren't even waiting for the government's help. They're just going to do the infrastructure
Yeah.
themselves. Yeah. It made me think about how like our data centers just going to start popping up all over across America, and maybe like would that help any like REITs or I don't know, construction, or does it help any other areas of the economy and business world besides these big tech companies?
Well, the first funny thing is just like that came to mind is like, oh, BlackRock and Microsoft. everybody's favorite brands. Like, I feel like getting those two together, it's just like, you couldn't get more like these are the corporate overlords kind of branding. Like, and all I hear about is like, when I hear that, it's like, yeah, probably it's only a matter of time before I'm like paying for 3 or 4 new products from them that I like that become an essential part of my life that I don't even know. They've like chopped it up, and I can't even speculate on what it is because I don't know yet. I just know that they're like that Microsoft is very good at just like kind of like weaseling its way into things um and then being like, oh, you use this, you charge for it. I bet it relates to OpenAI, and like that's the interest in BlackRock, and they're just trying to get a piece of that pie. Because those aren't traditional allies. And like one of the things that you have to like one of the things that you like that we talk about in the OpenAI story, right, is like a big reason that they even sold to Microsoft is because the compute became so expensive, right? And here you are like on this Microsoft expansion. And what do I think? I'm like, oh shit, like this compute is now too expensive for Microsoft to like forecast all the growth of like OpenAI and the products they're going to roll out to, and they need, the data centers for it. So it's kind of like that's a funny little food chain, right? OpenAI compute becomes too expensive, they go to Microsoft. Microsoft, believe it or not, like things can get too expensive for them. Who would they go to? BlackRock.
Yeah, that is interesting. And I see Saucepot is asking or kind of mentioning in our chat about, I don't know if this is true or not, but he's saying that data centers aren't going to be able to maintain their water usage demands. Do you have any insights on that? To cool down, are they using
Oh,
water?
there's a lot of interesting things coming through the pipe about data centers. Like water usage is one of them. The other thing, and that's why they've started to build some of them like underwater. But the other thing is that people are starting to say there's just not going to be enough of what's coming, right? And the compute's going to get like super expensive as a result because cooling and the water needed for it is part of it. Although I think that's a little easier to solve with technology. And when I see things like that, like my brain always kind of goes to like, well, water is kind of like an old an old technology. Like when I think about that, I think about people being like, oh, how are we going to run all these trains that run on steam like forever, right? That's what comes to mind in that, like, yes, this is not the first time we've needed something like water to make things work, but generally the path of technology moves beyond that. What we don't have figured out, and it's a good thing to prod at, Saucepot, is the general data center demand and the general demand for compute. That's basically like way forecasted way beyond what we're already planning to build. So that then becomes a very, 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 very interesting thing. And by the way, one of the reasons why, if you ever hear me say, like, what is the next blank? What would you own for the next 10 years? I'm like, the cloud providers, right? Like, at the end of the day, like, it's kind of, the old like joke about the golden rule. Whoever has the gold makes the rules. Like, whoever owns the compute, like, is going to make the rules. And I don't know exactly what China is doing with this, but I would not be surprised if they were building a shit ton of data centers, planning for the day that everybody else ran out and they were not telling anyone. I wouldn't be surprised if those data centers were underground or underwater and nobody had any idea that they were being built, just so the day could come when everybody's like, we're at a compute, we don't know who to buy from. And China's like, oh, we got some extra over here. It's going to cost you. And oh, by the way, like, we're not promising you anything about your data security. But come into our environments. That's my little prediction about the future. And where compute. Also underrated, the Nordic countries. Although I feel like they're too honest, I feel like if they were building like secret compute, like they'd just be like, we're building compute. Like that's much more up China's alley to just have these like underground computing facilities being built that we don't know about. And like just a funny thing about like prior macro research to like put a little bow on this story. Prior macro research that I done at one point when I was doing macroeconomic research at a fund I was working for, I stumbled upon uh, discussions of defense spending, and you could see the U.S.'s defense spending, you could see a lot of countries' defense spending, but you couldn't see China's defense spending because they don't say what their defense spending is. So that's why it's very easy to be like, oh yeah, they've probably got some secret project going on, like building data centers or what have you, right? Because they're not even telling you where all their, defense spending money is going, let alone all the things that we're probably not asking about. And one thing like that their government is well suited for is like them and their private equity companies. Like there's a lot of government funding that goes into their private equity funding situations. Granted, some of the things you get are like the ghost cities problem that they have. But yes, that's my bold prediction of when the world is running out of compute. China's gonna announce that they found some.
Well, one place you didn't mention where these data centers and compute could go is maybe outer space, which could lead us into our next topic. When I saw this story, I got so excited because I feel like we've been hinting at the space sector growing throughout the streams, an underlying topic we talk about, and a stock called Intuitive Machines, ticker LUNR. It was announced that they signed a deal with NASA for a moon satellite contract worth $4.82 billion that sent the stock up 50%. And we had ASTS just well, it's still up from where it was, but a few months ago, it started kind of getting on its uptrend. So were we on this story early, George? Is the space industry and sector starting to come to fruition?
Oh, I mean, space is the future, right? And for so many reasons, right? There's just like there are these logical reasons, right? Like why the hell are we making all of these phone towers, right? When we could just send something up to space. Like, and you have redundant systems, right? It's not like a phone tower where you can go repair it, like if something breaks, but you certainly can launch enough up there that if one breaks, another can cover. There's a lot of space up there, if you will, to put these things. So yeah, that's obviously the future. And the business potential is limitless. And there's so many like products, like if you think about like, phones, internet, like anything that we could power someday, like anything, although that's like, the conspiracy theorists will be like, we're beaming cancer or whatever. I'm just giving an example, conspiracy theorists. But anything there's currently a cord from, right? That's because there's some infrastructure attached to that probably could be replaced by infrastructure that's just beaming shit down to you. And I am singling out power because that is something like, beaming power around is something that a lot of people are researching, and there has been progress made. Like, granted, it's only worked in like shorter areas to this point, but like some of that is battery technology, advancing. There's a lot of stuff, but the fact remains, even if we don't get into crazy shit like mining rare metals in space, which you can do, or colonies in space, which obviously we're talking about, even if we're just talking about like basic things like looking around and anywhere you see a cord, like that could be replaced with a company that's like beaming that to you, that gives you an idea of just how big those industries can be. And that includes cars, right? Because a car, even an electric car, you're plugging that in, right? So like all of those technologies, and including, the sun that is powering, some of those things, like anything that you're plugging in, the utility sector in entirety, the energy sector in entirety, the telecommunication sector in entirety. Like I named like 3 of what I think it's like 11 or 12 main sectors, right? That could be raw materials, right? That could be in space. So I just like very quickly rattled off like a third of the sectors that could be replaced by space operations, not to mention even overlap things like, yes, if you if you shot servers up into space, you also wouldn't need to worry about cooling.
Yeah, the future is so amazing. And you're saying beaming energy. Are we talking Tesla coils? Nikola Tesla? Was he early to it?
You can really go down the conspiracy rabbit hole. Like there's I mean, if I want to give people some things to Google, have fun with the Y files. But there's certain people that actually think that the Egyptians, those pyramids were power plants, and they had actually mastered the same technology that Nikola Tesla was trying to master with the coils. Like, as those that like watch me on all of this stuff, like it's very hard for me to get all the way there on this kind of stuff because I'm like a data person. But I also am highly open to the idea that that is possible because I also have not seen enough data to disprove that, especially the like funny story about the pyramids. Like I do watch a lot of this kind of stuff. And there's a really funny documentary like on the pyramids. I think it was by like History Channel or whatever, where they're basically interviewing someone that's like an architect who's like specialized in, and he's basically showing one of the theories about the pyramids, that there's a lot of like filler in there that they put in, and it's not just like stones stacked all the way because the stones are hard to move. And he makes just like a very, very logical case for this. And then like the Egyptologist like comes on and was like, oh, like interesting theory about like all the stuff here, but there's no proof of that. Like, meanwhile, like these are the people that don't have an answer for how they got built in the first place. So it's like very silly for someone that's being like, oh, he's not an Egyptologist like me. Like, he doesn't have any proof of how this was built, as someone with no proof of how this was built that wants to be taken very seriously in this matter. Wow, we really got off the rails on that one, but probably I'm sure in an amusing way for everyone.
Oh, I'm so happy we did because I love that stuff too, and I've been down the same rabbit hole. So that was a funny little sidestep we did right there. I see a comment from Joseph. There's a great French documentary on YouTube on how they were possibly built. I'm gonna have to dive into that later, Joseph. But yeah, that was a fun little segue we did right there. The next story I had for today, which I think this could be a very interesting one for our chat, because you have firsthand
Honestly, Joseph,
insights.
you should, if you like that kind of stuff, you should check out the Y files on YouTube. Some of it is just like way too far out there, but some of it is very interesting.
Is that like a series or like one show?
It's a whole channel that's like, and it's like a series, and they just like they dig into all, like basically some of it is like some of it is like topics that are requested, some very interesting shit about the moon. Like I'd watch the ones on the moon. Like I'm normally someone that is just like very quick to just be like, because I'm a scientist at my like core, and a lot of this stuff is not really built on any kind of thing relating to the scientific method. But there's a very interesting Y files on the moon, and whether or not it's an alien craft, that I cannot disavow.
I am going to check that out later. That sounds right up my alley. That's kind of like entertainment I like to be consuming. But getting back,
I expected to well, like I've watched some other of the Y files, and he basically like there's one that's like a compilation episode where he's just basically like, honestly, like, because he's very honest at the end, and he's like, oh, there's all these doubts, I don't know. That's what I kind of like about it. He explores the theory, and then he kind of like gives the devil's advocate at the end. But in one of the compilation episodes, he's basically like, well, like most of this stuff we just explore and I don't know about it. But he's like, the moon and crop circles, and there's like a third one that I've all watched. I was like, oh yeah, there's some serious smoke to that.
speaking of some serious smoke to where the fire is, I want to hear some horror stories that you could possibly share with the chat because I saw the story about J.P. Morgan having to hire like an oversight board basically so that their junior bankers could be protected because it actually was said in the article that one kid died at Bank of America last year, but they were working 100-hour work weeks. And I'm wondering, as someone who's been inside of the Wall Street industry, what it was like when you were there. How was your experience?
So I always like my time on Wall Street wasn't long. Um, I think there's a lot of things on all sides of Wall Street. There's a lot of camaraderie. You work hard. Um, but you had fun too, and not like fun at the expense of others. I'm talking about there was a Friday, there was like where I ate Wonder Bread against the other interns and people bet on us. And another one, a very high stakes game of like that helicopter game where you pressed spacebar and it would would go up and down and people were betting on us. I got to DJ in a shared office space. I've got some very fond memories about Wall Street. Um, and like also a better meritocracy than most areas I've worked, just because like that's what I like about some of the things here and like the work that we do, right? At the end of the day, the numbers are the numbers, right? You can't argue with what our portfolio's done or anything like that. And everybody can see how we did. They can go backwards. And I do think that's why like work politics tend to be a little easier to navigate on Wall Street because you can't totally change the narrative about someone. But like some of it is very toxic. And like what I would say is kind of the worst is like the amount of work that gets done, especially in investment banking, that nobody needs. That it's just like kind of like an ongoing hazing. That's just like, oh, we did this, so you have to do it. It's just like a rite of passage. Um, and one of the funny stories, and I won't be too specific because I never wanted to call this person out. I was interviewing for a private equity firm, or attempting to interview it for a private equity firm before I graduated college, and it was like an alumni of my school, and I was very excited. And I actually reached out to a very, very successful alumni who responded to me and set up with an interview. And I was about to interview with like a managing director at the place. And the day of the interview, I got an email from that managing director that said, well, oh, there's this graduate from Pomona School, like near my school, Claremont, that says he'd love to talk to you before I did. And he's an associate. And, in these interview processes, you're just like, sure. And so we set a meeting for that day with the associate. The associate just doesn't call me for that meeting. And I email him and I'm just like, hey, you're supposed to meet at this time. I didn't hear from him. About 7:45 p.m. that night, I get a call from that person. And they were definitely drunk. and they were just like yelling at me and said like, I did 2 years of slave labor at blah blah investment bank, and how dare you, like, you can't like just come to private equity without like, earning your stripes like me, like blah blah blah. And like, he was just like, and some of it I was just like, all right, can I go now? And he's like, no, you need to like be put in your place. Like this guy like needed to yell at me like for like a half hour. That's the kind of like toxic like bullshit that happens there. I will, in these places, I will say the funny part about that is that like everybody is always saying that the current generation isn't like tough, right? Like, oh, they never had to go through like what we had to go through. And to a certain extent, they're right. There is more oversight, a little, right? But it's not real, right? For all this oversight and like whatever, like what people don't understand about Wall Street is like there's one rule of Wall Street, and I'll tell you what it is. It's just like people have to think you're capable of anything. They have to be afraid of you. They have to say, I don't know what this motherfucker is going to do. He's crazy. Like, that's the culture. And I appreciate learning that because it has served me well in other places. But I say that to you because, like, it's like having HR or this like oversight. If anyone thinks that, like, oh, just because there's a supervisor, that some analyst that feels they're going to be asked to work hard is going to go and be like, oh, they made me work on Saturday and that's against the rules. No one's ever going to do that. There's no whining on Wall Street. Like, some things never change. So this is all optics, but like, it is funny. Like the one funny part that is about this is I have gotten this question more than a few times. Like, oh, is like Wall Street like softening up? It's like, no, Wall Street's not. Like, they were the first people to call everyone back to work. Like, no, they can't soften up. Like Wall Street's culture is like, basically, if you could sum it up, it's like toughen up or get the fuck out. Like that's Wall Street.
I like that. It's brute. But I want to also know, does our chat like that? So after hearing everything George just said, just a quick yes or no in the comments. Would you want to work on Wall Street? I think it's interesting because I think it depends on your personality. It sounds like you got to be able to take a lot to survive there. But it does also sound fun. This stuff you shared in the beginning. Yeah,
it can be fun if you have the right attitude, right, and you've got thick skin.
Mm-hmm.
But it's not for everyone. It's not for everyone. And there's degrees, right? Bridgewater their culture is like radical transparency. So like at Bridgewater, you can like, look at a meeting between like Ray Dalio and like, I mean, he's not, I don't know how much he's there anymore, but like any meeting is recorded and you can see it. And basically like you are much more likely to get fired at Bridgewater for not saying you made a mistake than making a mistake, which is very different than the rest of Wall Street. Like the rest of Wall Street is generally like, you have to be right. That's the one rule. You have to be right. You have to be there. Like easy rules like that. The more right you are, the better you're going to be. Your track record is everything. But Bridgewater is interesting. It is actually much more about like being transparent, being open, being honest. And that's the one where it's kind of like a cult. People love Bridgewater or they flame out like very quickly. And like, that's pretty much how anyone that's a former Bridgewater or whatever talks about it. I mean, honestly, like that sounds like one of the better, like if I was going to go back to Wall Street, which I probably never would, like Bridgewater would make more sense than any other place to me, because I actually think that makes sense. Transparency over toxic achievement culture.
Not .72 with Steve Cohen.
Oh, my favorite. No, we don't. We give Steve Cohen too hard of a time sometimes, but we don't want to be on Steve Cohen's bad side. We think he's very terrifying and smart. So
let's go Mets.
So we talk about him a little, but we also respect Steve Cohen.
We are pushing it on time, but I just want to quickly squeak in this topic as we wrap up before we go to the model portfolio. So the SEC approved a new rule that stock exchanges can price stocks in half a penny versus 1 penny increments, and they shared this as kind of a way to help retail investors get better pricing, reduce investor costs. But it just intuitively doesn't make sense to me. Like a half a penny is this not going to affect any retail investor? I feel like it's the big dogs who this is really going to benefit. Is that, you think that's right?
Yeah, or the computers, right?
Yeah.
Like that's a high frequency trading thing. You know who cares about a half a penny? Like computers. That's who does. Like not people. Nobody's like, oh, thank God. Now I can bid 140,005 like for something instead of just 140. Like, no, nobody thinks like that. That's like not only just for computers, that's probably for like the Citadel Robinhood relationships of the world. So they can just like clip as many like fractions of cents as they possibly can without people noticing.
Yeah, it'll be a tenth of a penny
Probably
in
the
5
Citadel.
years.
That's like the Citadel Virtue Financial bill, probably. Sponsored by.
All right, George, you want to do our switch over now? We'll see you at
Yeah,
the
let's do it.
Prospero Laboratory. All right. Hang with me, chat, while George does the switch over. We'll take a look at the market in Prospero, what the net option sentiment readings are doing. I do want to take a live look before I do that at the markets, because when we started the stream, it was a bit volatile, but generally higher across the board. Okay, so I have the QQQ pulled up now, and we're down about 0.25%. So seems like the market is digesting all of the news it got today. The S&P is also down. The Dow Jones is also down. The QQQ is actually down a third. I think my phone just updated. SPY's down a quarter. Dow Jones down 0.2. IWM is the only one up. So maybe we're seeing a change in leadership with the small cap stocks, at least performing above the rest of the markets. But let's take a look at the QQQ net option sentiment. Still staying at bullish levels at 53. I think at the beginning of the stream it was at 55, so slightly lower, but still firmly at bullish levels. And we'll take a look at the SPY.
Where are they?
Okay, so the SPY is at 38 and QQQ is at 53.
Ooh. It
That's
dipped below. I've been watching that. Yeah, we're gonna be a little more conservative here.
The markets are also red too, so
yeah. No, I was what I was closing with that actually reminded me, Stephen. I don't know if I ever told you my idea for reform, where everybody for campaign finance reform, where everything stays the same except it's just like NASCAR, and you've got to just like wear patches for all the people that take money, so everybody can just see, and you have to be just like this, walking advertisement for the money you take.
Some people would not be able to fit them all on their suits and stuff.
Yeah,
They'd just they have to walk with a billboard behind them.
Like bigger patches, it should be bigger patches for like the more money that you took. But like, yeah,
that is a good idea.
Yeah, I think it would be like it seems like it's like fitting for the situation too. It's like, okay, like, yeah, this is kind of this has gotten silly at this point. So, if you're gonna just like play for these teams, at least let us know what teams you're playing for.
At least put it on the business card. You don't have to wear it to me, but just some.
Oh no, come on, those like congressional things would be so funny.
All right, so QQQ net option sentiment is ongoing bullish level of 53, and SPY continues to decline to 38. Definitely gotten more long than short, and I lost my place. Balance back out a bit due to the decline.
I sent one today, so. Maybe not everyone knows the news. Ooh, energy coming back a little bit. We're definitely gonna. I don't know if we want energy longs. No, we're not gonna do that. Why don't we want energy longs? Because we are trying to get more short. Interesting to see the caps. Oh, that is, yeah. That makes sense that we're seeing a little bit more strength in small cap. Okay, this momentum scored 918. Same people. We need to get ourselves. Let's get our tunnel booted. Let's do this. Then we need. We want this. I'm going to take another look at our. Oh, there we go. Let's try to get all this together. So I think we grabbed a lot of these this morning and we don't want more anyway. So that is easy. That makes our life a lot easier here. We really care much more about the bottom. I don't want this. This. We just got that. We just got this too. And I know that's small cap. Just taking some shortcuts. Let's see. How are we doing? Do we have a nice cap mix? I think we want to get rid of Lake. And then we have a lot of financials. Oops. We definitely want this utilities. Yeah, let's get some utilities here. We want some utilities options. Let's cut another small cap somewhere. Yeah, let's get rid of MODG because we don't really want that. All right, that seems good to me. What happened here? 18. Maybe we want to cut one more. Cut Lake. 80. Let's get rid of this energy. Both of these energies, because we don't want to play energy right now. There we go. All right. Now, oops, we forgot to fill this in, but we will fix that. Oh. All right. Whatever. We'll do it on overall momentum score. Sure. We want some bears, right? I like all of these as bears. Gotta balance it out. HWC, sure. Anything else? I do think SJW looks interesting, but we'll worry about that later. We got those. I don't think we got these. Not sure that it really matters, but we want to be accurate. Okay. Everybody's seen this. And we want to get this placed. Make sure we at least get our, where's our new, okay. We're not going to enter any long. We're just getting more shorts here. That'll balance this out more. Great. And now we want to do this. What happened here? 917. No, this is not what we want. Oh. Okay, we want to get some. All right, let's just be a little bit. All right, so we're going to cut these. All right. Get that. Oops. And then let's do one of these maras. And we did this the wrong way. So there. Now let's see if we can squeeze in these shorts. I think we can. We don't really want to exit them, but let's just see if there's any. And there we go. We don't want to be in them for the sake of being in them. And I think we're exiting more along. Yes. Okay, here we go. We got everything. Blah, blah, blah. Okay, we did it. All right, any questions?
No questions in our chat. That was a fun stream today. I hope everybody enjoyed.
Yes, it was fun. I got everything in too. I think we're fine to send this. All right.
All right, that's going to do it for today. Thanks, everybody, for stopping by. Thank you, George. We'll see everybody back here Monday.
Thanks.
Have a good rest of the week, everyone. Bye.